Let's start off and talk about the economy a little bit. And obviously, we've been on a good long run here.
A very long run.
And yet, does that surprise you? And what would be the signs that you would look for to see that things were winding down?
Well, I look at a lot of figures just in connection with our businesses. I like to get numbers. so I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses. And it really doesn't make any difference in what I do today in terms of buying stocks or buying businesses, what those numbers tell me. They're interesting, but they're not guides to me. If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year. We care a lot about the price. We do not care about the next 12 months.
But are you surprised at how long this economy has been expanding?
I've been surprised by all kinds of things in the last 10 years about the economy. I mean, I don't think there was any economist I've ever read that talked about negative interest rates for long periods of time. I mean, if you go back and read Keynes or you read Samuelson, you read any of them, they do not get into a negative rate environment. I think now there's still 11 trillion that's of government debt around the world that's at a negative rate. So we've never seen it before, and we've never seen, at least the conventional wisdom on a sustained period of long and growing deficits while the economy is getting better, extremely low interest rates, and really very little inflation. So something different is happening, but something different happens all the time. So, and that's one reason economic predictions just don't enter into our decisions. Charlie Munger, my partner, and I, in 54 years now, we've never made a decision based on an economic prediction. We make business predictions about what individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right.
All right, so you don't pay much attention to the dismal scientists then, I guess.
Well, I pay none in the sense of as a guideline to doing anything. It's entertainment. I mean, it's like going to a variety show or something like that. But and I just don't know of any economist that actually has bought businesses successfully or done well in stocks. Paul Samuelson did. And you may know he was a big shareholder of Berkshire. But it's, they make guesses, and there's so many variables. I mean, in the hard sciences, you know that, if an apple falls from a tree, that it isn't going to change over the centuries because of anything or political developments or 400 other variables that go in. But when you get into economics, there's so many variables, and the truth is, you've got to expect good times and bad times in business. And if you were to buy an auto dealership and you're, wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort.
Fair enough. You have over $100 billion of cash.
Berkshire does that.
Berkshire. Yeah. No, I don't even see how much you got. Maybe you do. Berkshire has over $100 billion in cash, and you say that you always want this company to be a fortress. So how much cash should an ordinary investor have on a percentage basis, do you think?
It depends on their personal situation. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent diversified businesses, you don't really need any cash.
So you can be more cash-free than Berkshire is?
Yeah, I've got responsibility. We've got insurance claims. We could have hurricanes that, would happen. all kinds of things where we might have to pay out billions of dollars, and I've got over 1 million people that own shares that are counting on me to run the place so we get through periods like that. But if I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children were growing, the house was paid off and everything. But, I wouldn't worry too much about having a lot of cash around.
Let's talk a little bit about Apple. Everyone always wants to talk about Apple, right? It's kind of the it stock, it company. You have a $45 billion stake, more or less. How closely do you follow the company? You know, people are concerned they haven't really introduced any new products.
Well, if you have to closely follow a company, you shouldn't own it.
Really?
No. I mean, if you buy a business, if you buy a farm, you go up and look, every couple of weeks to see how far the corn is up, and you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for. I've got one farm that I bought in the 1980s, and my son runs it, but I've been there once. I mean, it doesn't grow faster if I go and stare at it. I can't cheer for it. More effort, or something like that. And I know there's going to be some years when prices are going to be good and some when the prices aren't going to be good. I know there's years when yields will be better than others. But about the farm, and if it just doesn't, I don't care about economic predictions on it or anything of the sort. I do care that over the years it's well tended to, and in terms of rotating crops, and I hope yields get better, which they generally have. In fact, that farm 100 years ago would have probably produced 30 bushels, maybe 35 bushels of corn per acre. And now in a good year, it'd be 200. I mean, we've really made progress in this country. That's one reason commodity prices, if you go back a couple hundred years, they've moved so little, is because we've just gotten better and better at whether it's cotton or whether it's corn or soybeans or all kinds of things. And you and I have benefited from that.
And so Apple is kind of like a farm.
Well, it's a long-term investment, and if you own the best auto dealership in town, the best brand, and you had somebody good running it, you wouldn't drop by every day and say, how many people have come in today, or I think interest rates are going up a little, maybe it'll slow down our sales or anything. No, you buy it knowing there's 365 days a year, and you're going to own it for 20 years, so that's 7,300 days, and things are going to be different from day to day and year to year. You shouldn't buy it if the day-to-day stuff is important.
Let's switch over to talk about buybacks, which is another hot topic these days. And you did a fair amount. If you look in the annual report, you can see that between December 13th and 24th, it looks like you guys bought back about $233 million worth of Berkshire, which was right near that particular stock market bottom. How did you know that? Or what was going through your mind?
If I knew it, I'd have bought a lot more than 200 million. No, that's not a big purchase for us, actually. And no, we will buy Berkshire when we have lots of excess cash. All the needs of the business are taken care of. We spent $14 billion on property, plant, and equipment last year, way more than depreciation. So we take care of the needs of the business. Then we have excess cash, and if we we'd love to do is find other businesses to buy. But if I think the stock, and my partner Charlie Munger think the stock is selling below intrinsic business value, we will buy in stock.
So it obviously was at that point.
Well, we thought so, yeah. But what's really intriguing is when it goes down a lot. I mean, when you're buying dollar bills for 60 or 70 cents, which periodically you get a chance to do in stocks, then assuming you've got the cash, you don't want to ever get so that some surprise could really take you out in some way. But if we've got excess cash, we'll buy it as fast as we can.
But at that point, it would be more like a 2009 rather than just December of this past
year. Yeah, exactly.
Right.
But it's, if you and I own a McDonald's franchise together and it's worth $1 million and you own 50% of it, and you come to me and you say, I'll sell out for $400,000, I'll buy you out.
If you say want to buy mine, I'd be wary of that, but
yeah, well,
for just that reason.
You should be, yeah. But right. If you want $600,000, I'll just say, come back tomorrow.
So just continuing about buybacks, Senator Schumer's and Sanders want the government to weigh in to sort of legislate when companies can do buybacks. And then also there was a report recently about executives doing insider trading, it appears, around the times of buybacks. So are buybacks a kind of a problem?
Well, you'll have some people that misbehave in respect to any activity. I mean, it really wouldn't have much to do with buybacks. I think buybacks, the degree to which they've been part of nefarious activity, and I've observed them for a lot of years, are very close to zero. But that just may be that there aren't enough opportunities. But that article did not, I didn't follow the conclusion on it. I mean, you're distributing money to shareholders. Essentially, you can do it by dividends, and presumably American business should distribute money to its owners occasionally. And we do it through buybacks, or we've done some, and we don't do it through dividends. But most companies do it through having a dividend policy. And then if they have money beyond the needs of the business, then I think if their stock is underpriced, then it makes nothing but sense.
Should the government tell companies when to do it, or at least mandate conditions where they can?
Well, they do restrict you a little in terms of if you're some general rule of the SEC, if you're having some kind of, this isn't quite the right word, but manipulative activity or anything like that in the stock. But no, I don't think the government should decide your dividend policy. I don't even think they should direct your capital investments. They can make it enticing to make certain kinds of capital investments, which they do with renewable energy, for example. I mean, the government has interest in fostering certain developments in this country over time, and they do. There used to be a special oil depletion allowance, 50 years ago and so on. That was more politics than it was governmental policy, but certainly renewables are a prime example of that. But the idea of directing whether you are entitled to return cash to shareholders and the manner in which you do it, I don't think really makes a lot of sense.
The 2020 election is going to be upon us before we know it. And I know that you had some nice things to say about Mike Bloomberg, but it appears he is not going to be running now.
Yeah, it's hard to win with just a billionaire vote.
You would have your vote and a few others. That's funny.
But I admire him enormously. I wish he had run. I want to be very clear on that.
President Trump was a business executive. So 2 questions. Is a business executive the right kind of person to be president? And what characteristics do you look for a president that you would support?
Well, I think a business executive can be the right person, but I don't think that because they're a business executive that you give them extra points. And number one, I want a president that wakes up every morning and realizes that the greatest threat to a country which has got all kinds of things going for it are weapons of mass destruction, and that we live in a world where people, organizations, and occasionally countries could have people that would like to wipe out a large percentage of the American people, or maybe other countries as well, and that you now have capabilities which I always thought until recently I classified as nuclear, chemical, and biological, but I think you have to add cyber now. If you have some evil genius someplace that for crazy reasons, just like happened with anthrax back, who knows what motivates somebody that starts sending anthrax out in letters. And if you have somebody that thinks that it'd be great to send a false alarm to the Russians and to the U.S. that the other side was launching or something of the sort. It's a very, very dangerous world. It's a wonderful world, but it has dangers now that started in August of 1945, and when Einstein said, this changes everything in the world except how men think. So I want a president that has that same filter, that all of these other things are important, but protecting the country and reducing the chance of successful use of weapons of mass destruction